Yeah, jiggy jiggy, heavy heavy. All the girls love me, oh, like money. Call me jiggy jiggy, heavy heavy. All eyes on me. Machiavelli, girl, you got me speeding, yeah, yeah. Doing 240 on Lecky Ekpe. With the top down, no do,
For those who actually join in, but definitely the main reason of this stream today is actually to just recap what has been happening in the market for the month of Jan to all the way to the month of Feb. And it is very, very important, just to have a little bit of idea in terms of how the market are doing and what exactly, an instrument that actually affected us in the global market and how we can be able, to actually prepare for the next session of the month. So there's a couple of things that actually happening in the market. And you guys, if you are tuning in live, you can be able to actually, uh, ask any question. If you want to ask, can be a conversation. If it has to be, something like a conversation, so that we can be able to have some sort of like engagement. You know. So the most interesting part that actually happening from the month of Jan to the month of February in terms of the global economic, it was the way payroll report was in the United States. So we realized that in terms of the payroll in the United States, there was a little bit of corrosion whereby numbers they were actually getting to estimated numbers that they were expected, and which is very, very nice. If you were expecting you're going to hire over 2,000 people, for example, and you get actually maybe 2001 that are being employed, that means the numbers in terms of the data and in terms of people that are going to join to actually participate in a labor of United States, they're a little bit more, and what it translates to people who are actually going to pay tax in that particular region, and that means there's a lot of people that they want to be able to pay tax, and which is good for the economy of the United States. So if I can see here, regarding I got my report. Regarding my report, I don't know you guys you can see it, but okay. So the non-farm payroll report was on a recently it was on a third of February, whereby okay, let me just pull my screen a little bit closer to me so that I can be able to see it clear. So obviously it indicates the numbers of the job added from the previous month, excluding the farm employees and the government employees, private household and employees from the NGO. So NGOs, the farm employees, they're not included in this report. And we actually see that the US economy and expected created 517,000 jobs in a January 2023, which is amazing in terms of how much people they're actually getting into uh, that labor department, and the most since July. So that was the highest since July of 2022, and easily because July 2022 there were 401,000 new jobs that are being introduced into the industry, which is February, 3rd of the Feb, the report talking about 517 jobs that are actually, employed in terms of, in the labor department of United States of America. So the job growth was widespread in Jan, read by the gains in the leisure. So the leisure department, hospitality department, they actually get to 128,000 jobs that they were employed. Professional and the businesses, business services. So professional and the business services, they were added 2,000. And again, the other department, it's a healthy department that actually score 58,000 new jobs that they were actually, employed in the month of Feb. So this is very, very, I'm not gonna lie, very important in terms of how it translates to the our global market. how we can be able to trade based on this thing. Because if you look at this report, it actually goes again to these numbers pushing on CPI report, and that CPI report, it follows on a PPI report, and all these reports, they actually translate in the global market when we are actually trading. So these are very, very important to keep an eye on it, and most of the time to keep on looking at these type of numbers, and to see if the employment are growing in terms of the dollar index itself, or the employment are actually dropping in terms of the dollar index itself. So after that, the report of NFP, we actually also see the inflation report, the report that actually drive the inflation of the United States, so that they can give us, whatever, basis points for people who are living in the United States, so that they can be able to uh, increase their product, and people purchase with a higher price, so that they make profit and the economy can continue going. So it's a CPI. The CPI is Consumer Price Index. The Consumer Price Index, which is actually it influence the inflation rises at 0.5%. So over the last month in Jan, it actually rises at a 0.5%, and it's very, very nice from Jan having that, a little bit of a growth in terms of the inflation rates, which is very, very beautiful. And again, if we break down in terms of the CPI, Consumer Price Index, there's a different department that actually contribute to those to that report of Price Index. So the government data showed on Tuesday, on an annual basis, the CPI roses to 6.4%, continually a steady march down from the 9.1% peak last June. So the peak of the consumer price index, that was actually 2022 June, and that's where we see another peak on January in terms of consumer price index. So that actually tells you that the consumers, they're actually buying the product. They're actually buying, participating in the market, so that the market can have a little bit of more economy moving. And that's where we see also that in terms of the feds, when they were releasing the report, and the report gets to 25 basis points, on a Jan, because of how the CPI, how the consumer price index actually, the report actually tells us how did the consumers, participate in a market. So the economists had expected the price to climb from 6.2% over the year, and the jump to 0.5% month over the month per consecutive estimated from the Bloomberg, which is one of the biggest channel in terms of the economic report. So that's where the report we get it from, Bloomberg, and as well as the core CPI, which strips out the volatility food and energy components of the report, climbed to 5.6% year over the year, more than expected, and 0.4% over the prior of the month. So the forecast day, it was very, very good, called for 5.5% annual increase from 0.5% monthly rise in the core CPI readings. So the core CPI readings, it actually deals with the volatility of energy sector, the volatility of food, sector, production of the food, or selling of the food, or selling of the energy product. So it shows that year to year it's been increasing to 5.6%. But when we see the NFP, it identifies that it was a little bit high compared to what they were expecting. A week later, that's where we see the CPI also saying that it was a little bit of higher, comparing what it was before. So the numbers, in terms of the higher numbers, the last time that it was very, very high numbers like this, it was on June 2022. So basically, it says a lot in terms of the global market and how the global market is actually, going forward. So that was The other one that the second event that actually follows. The third event that actually follows, it was the PPI, the Producer Price Index. So we have the report in terms of uh, labor bureau, people who are employed without non-farm people and without NGO. Then we have the report again of the CPI, Consumer Price Index, which is we see that the non-farm payroll, it was actually good. The payroll that comes on a CPI, I mean the report that comes on a CPI, it was also better. It actually better shows the stats. It was better than the last time it was good like that. It was June 2022. Then after that, the other report that follows on a month, it was the PPI. So the other event, it was the PPI, the Producer Price Index. So we see the report of how people contribute in a global market or in a United States economy in terms of buying power. Now we have to see, how the producers being produce, this product and how they actually being impacted into the global market. So the PPI news results, producer price index rose in January, but annual inflation continued to be cooled down. So the inflation was still on the 25 basis points, although we see the numbers actually, getting better. So it actually tells us that the economy started actually picking up from the last time where it was COVID-19, where people they couldn't actually, do the business, and that's why we were having the increase of 75% point basis, 50% basis points, and we come the first of the year, January 1st of the 2023, actually offers us the 25 basis points, which was good. So the key inflation level here, the key inflation metric shows the wholesaler price picked up in January from the December, but continuing to cool on an annual basis according to the data release. Again, it was on Thursday, so it happened on Tuesday, last Tuesday. This one it happened yesterday, which is Thursday. So the January's producer price index, which is the PPI, the numbers like consumer price index reportedly earlier this week come in a hotter than expected of 0.7% of headline month of the over the month, above on 0.4% expected. So producers again, we're seeing that they're doing good. In terms of they were expecting to get 0.5 growth percent in terms of producing product that can go to consumers, right? But now the numbers are showing that it actually increases at 0.7% from 0.4 to 0.7, quite a little bit of growth in terms of the global economy. So this is what actually tells us that the global economy is starting actually, to grow. But again, in terms of the consumer price index, it's actually divided. It's breaking down in terms of which sector deals with what, which sector contributed what number. All right. So this is the higher figure we have since seen in June of the last year, and still well of the 1.7% we saw in March 2022. So the biggest raise in terms of the growth of PPI, in terms of producer price index, it was in March 2022 where the producers product grew to over 1.7%. But now, because of all the COVID, everything, the economy has been, going all the way down and down and down. That's why this month, end of this month, beginning of this month, we saw the rise of zero point 0.5 comparing the estimation of 0.4%. So again, stripping out food and energy cost, the core print was still the hotter than expected 0.5%. This gain is considering below a 12-month higher in a March of 1.3%. But Energy and the trade come in at 0.6%. Three-time analysis expected to 1.0% in March. The PPI numbers can be seen as far as it grown at this particular time. So you can see that the energy and the food industry, they are the ones that actually contributed at this month from January to February in terms of the global economy. The reason why we're talking about the United States report, because these are the major drives in terms of the global economy. So we should always look at these reports. Once we see this report, we can see how the market actually grow. Behind me, we can see everything it's on red. Oh, damn, it's crazy. NFP, it's crazy. Euro USD, S&P 500, Nasdaq, everything is going down. I don't know what's going on, but again, it might be the report that comes, the PPI report that we're talking about that comes on yesterday. Now, here's the tricky part. All the report that we're seeing from NFP, CPI, PPI, non-farm payroll, consumer price index, producer power price index, they're all looking very positive. But why is that when you look at the stock market, everything is falling down? Everything is having a loss. At some point, we've been seeing, the safe haven, which is called gold, actually fall the same way that the dollar index is falling. What makes him that? So, guys, ladies and gentlemen, just hold on a second. Let me take a glass of water so that we can continue talk about why the market is continuing fall while we can see the data release coming from all these. They are actually positive. The positive data market are falling. It's crazy time in the market. Just hold on a second.